Good morning, everybody. Hey, welcome to Tuesday, January 24th. And hey, as we get ready to start the show today, I have a favor to ask, right? So I want you to look here. I'm going to stop sharing my screen. You see me, you see the backdrop, you see the lighting. Hey, I just want your opinion, right? We've done a couple different things over the last couple of days. If you go back and just look at the last 5 shows and let me know which lighting, which background you think works the best. I'd really appreciate it. Thanks again for doing that. Hey, we're getting ready for Dave to pop on here in just a second. Before we do that, though, let's not forget, let's go through our morning ritual here. And that is this, that there are so many things in this world that you and I, guess what? We can't control them. But there are a few things you can. And one of them is how much risk you have in your portfolio. You need to know what that is to make sure you don't have too much and to make sure you have enough. You need to be in that sweet spot so it matches up with where you should be. Give us a call, 863-382-0037 to schedule your core retirement design phone consultation. And with that, we're going to have Dave coming up next.
Miley Cyrus is there. It's Morning Dave. We're at 8:40 here, 20 now before 9. Let's check in on your money and see what Wall Street's doing to you this morning. We're in the middle of earnings season, and that means, well, your stockbroker's probably very happy today because none of the external junk is really going to affect it because we don't have very much on the macro side of the fence in terms of government data dump. But a whole bunch of companies that we've heard of have reported, and we got some tidbits. Let's check in with Phillip Statler from Statler Financial Services and see what he's got this morning. Phillip, how you doing today?
Hey, good morning, Dave. Doing well today. As we finish up this first, this is the last full week of January. It's hard to believe that January is really gone, but we've had 2 really good days, right? We had Friday and Monday. The markets did well.
It was holy crud time. I mean, the NASDAQ exchange is up by 4% in 2 days. And, if you hadn't considered the fact that NASDAQ had tanked down farther than anybody else had, you'd say, wow, I mean, happy days are here again. But we're only opening up at 11,364 this morning. And let me see, what was the all-time high? Something like 15,000, wasn't it?
Yeah, it's up close to 16, if not 16.
Yeah, we've got a lot more ground to make up in the process, but I was saying I can't help but think that the tech stocks leading the charge back, that's almost a dead cat bounce given all of the layoffs that they're announcing from all the extra employees they laid on during the pandemic. You mentioned that it was good for the last 3 days, but it obviously isn't so far today, and a lot of that was led off by the report that came out after we got done talking yesterday morning. Leading economic indicators came out. That was good, and we kind of got a little bit of buoyancy out of it yesterday, didn't we?
Well, I'm thinking so. I mean, it was down, right? It was down 1%. And so I think the indication was that that's good news for the Fed perspective, that interest rates maybe won't go up as much as everybody was originally thinking. Obviously, that's just one little tiny blip on the screen of everything the Fed looks at. So I'm not so sure that's going to weigh much in on their decision.
Probably won't, and that decision's getting a lot closer. Just for the sake of reminding somebody, you mentioned that this is the last full week of January. The first week of February is next week, and that's when the Federal Reserve meets and makes their interest rate decisions. So I've got to assume that any tidbit of news like, oh, maybe the GDP reading or something that we get tomorrow is probably going to weigh real heavily on the market, even in excess of earnings.
Yeah, it will. It won't be tomorrow, though. It'll be Thursday. Folks will have to wait an extra day. So Thursday. So, yeah, Thursday's going to be a huge day. I mean, we got our normal jobs, but then you got GDP, you got durable good orders, you got capital good orders, you got all kinds of stuff happening, even new home sales later on Thursday. So a lot of stuff coming out on Thursday.
Absolutely. Tidbits out this morning, and it's really not a whole heck of a lot more than tidbits on that. You had a new deal. Amazon is fighting back a little bit, and Big Pharma might be the victim on this one, huh?
Well, I found this one interesting. Amazon, they bought they started their online pharmacy. They bought
Mhm.
Pill Pack or something like that a couple years ago. So they're adding a benefit for Prime members. For $5 a month, you'll be able to get one of 50 different generic drugs for no cost. And so I
Ooh.
find that interesting that for $5 you can get that list of 50 if you need them for nothing extra, just $5 a month. So that's going to be interesting. That's per person, right? Not so if there's two in your household, you got to pay $10 a month for that benefit. But still, if you need any of those things that are on that list, that's a pretty extensive deal and could be pretty beneficial.
I've always said that I feel lucky in that I don't have any chronic meds that I take on a regular basis, but I got a whole pile of friends that do, and that sounds like manna from heaven in a couple of their worlds, doesn't it?
Yeah, it really does. Now I'll tell you, it's not helping their stock any, but and maybe it's because it's a loss leader, but trying to get people to use their online pharmacy for all of their pharmaceutical needs, by dangling that 50 out there on that list as absolutely no cost.
And it may make that $130 prime annual bill just a little bit more attractive to folks, knowing there's one more benefit you can get off of it. I mean, Thursday night football really was not enough to enthuse me about keeping my prime membership. It was the shipping savings that did me.
Yeah, it really was the shipping savings, and that's still the big deal. Unfortunately, the 2 day shipping is still 2 day shipping, but it takes them so long to process the orders anymore that you don't get it in 2 days.
Yeah, the prime next day and 2 day stuff generally is now 3 or 4 days. Which, okay, fine. 99% of the stuff I buy, I'm not in that much of a hot-blooded rush anyway. But still, it's all slowing down little by little as they try to conserve costs.
Exactly. Yep.
Absolutely. The
Exactly.
only other tidbit I've really got out there, and I found this funny more than anything else, the FBI announced that somebody had $100 million worth of Bitcoin stolen from them, and the FBI says it was North Korean hackers that did it. I didn't find a timeline on it. I'm wondering if that was before or after that Bitcoin exchange went toes up.
That'll be interesting. Yeah.
Couldn't happen to a nicer company, could it? We do have earnings season going on, and probably the lead number that caught my eye when you mentioned that we had it in was our one of our big cell phone companies. Verizon reported, and I'm seeing them trading down in pre-market. How did their report look?
So Verizon had kind of a mixed results for their fourth quarter of last year. Earnings were basically met expectations, not above, not below, just right in line. However, their forward-looking earnings, like what they expect in this next quarter, fell short of what the consensus estimate was, and so I think that's why you're seeing them get beat up a little this morning. They're trading down almost 2.1% this morning.
Guidance rules all, doesn't it?
Especially given where we are right now, in terms of the uncertainty of our economy. I think that forward-looking guidance is going to even weigh even more than we've probably ever seen it before.
Understood. I'm seeing an awful lot of surprises on my loser list today. What else have we got?
So the other one we had, I got two more for you. Johnson and Johnson reported, and they had a mixed quarter as well. Their profit beat by 10 cents a share as far as earnings per share, but they missed on their revenue numbers. Their full year, they gave some full year outlook, and earnings were they expect slightly higher earnings than what everybody else, the estimates are out there. So that was kind of good news, but they're just not making it today. They're down almost 1.1% this morning before the trading starts.
Wow. And they're even already through their baby powder debacle and all the rest of the stuff. It's just pure sales and projections, isn't it?
It really is. The last one I have for you, Dave, is kind of aerospace, the defense company, Lockheed Martin. And they did have a good quarter. They beat across the board on earnings and on revenue, and they're getting rewarded for that this morning, trading up A little over 1% this morning.
Ooh, I got to assume that they're probably one of the beneficiaries of all the buying that we're doing and shipping stuff over to Ukraine. Military contractors in general, I got to assume, are doing well.
That you very well could be. I know they're getting. I mean, they're not right up against their 52-week high, but right now they would open like $445 a share, and their 52-week high is $498 a share. So they're within probably what 10% or 12% of their 52-week high right now.
Given where the rest of the market is, that's
pretty daggum good, isn't it?
Exactly. We both were kind of looking, and all we found was top line stuff on that. But one of the household names that just is leading my big loser list this morning, 3M evidently stunk the place up. I got them down almost 4.5% right now, and when you can't sell Post-it notes and Scotch tape to expectations, we've got a hinky economy, don't we?
Yeah, I'm not sure how they did on gross revenue, but I know on earnings per share they missed. They were expected to come in like $2.34 a share, and they only made $2.28 a share. It's a pretty big disappointment. You're right; they're trading right now down almost 4.5%.
Absolutely, and they kind of qualify as one of the business sundry outfits, and they pretty much have their fingers in a whole pile of different businesses, so I'm always surprised when they go down. Resetting the table for the morning, it was an up day yesterday on Wall Street. NASDAQ continued to growth, another full 2% up yesterday. Dow was up by 254. The Standard & Poor's was up by 47. Looked like a really good day yesterday. Then we come to this morning, and my delayed quotes are going down, Phillip. I'm almost afraid to ask. 45 minutes before we open, how do things look?
Yeah, we have slidden significantly this morning since I got up and started looking at it. The Dow right now is down almost 150 points. That's getting close to 0.5%. The S&P 500 is down 0.5%. That's $20. The NASDAQ 100 down 0.75%, about $87. So everything's solid red this morning. Even on the other side, we got silver down a little over 0.1% to $23.52 an ounce. Gold is heading the other direction. They're up about 0.3%, about where they were yesterday, $1,933 an ounce. Crude oil is lower than where it was yesterday, kind of flat right now, $81.67 a barrel. I think that's pretty close to about $1 less than where it was yesterday morning.
That's my memory, too. And I mean, I'm almost getting used to $81, $82 a barrel, and that's a scary thought in its own right, isn't it?
Yeah, it really is, because that means gas prices are going to hang around that 350 mark.
Yep. Go into the overseas markets, and you can always tell what influences it down the line. Asian Rim markets closed about 6 a.m. this morning, so they're looking at yesterday. They were up big time. Hong Kong, matter of fact, up by 1.8% yesterday at the close. Everything was green over there. Europe is looking at our futures and saying, uh-oh, they're all down about 0.33% across the European Union this morning. Does somebody want to find out how to stabilize a retirement fund where what you and I talk about every morning is casual interest instead of sit on the end of the chair wondering where my retirement's going to be? That takes some expert eyes. How do I find you to get those eyes?
Dave, all of that is exactly why I developed the core retirement design. Give us a call at 863-382-0037 to schedule your 30-minute, no obligation phone consultation, where we'll walk you through and make sure you're on the right path for the retirement you always dreamed of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here tomorrow morning with a whole pile of new information, same time on Light FM. Phillip, thank you so much. You have a good day.
All right, man. You too. Take care.
Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us. And man, it's hard to believe January's about over. But I hope you'll join us again tomorrow. Same time, same place. Until then, have a great day. Bye now.